What happens when a tech giant's colossal fortune hits a legal snag? Can a single courtroom decision send shockwaves through the global market? And how does one of the world's most influential entrepreneurs react when billions are on the line? Dive into the riveting saga where innovation collides with governance, and a staggering $55 billion is suddenly up for debate. This story isn't just about numbers. It's about ambition, power, and the unforeseen challenges that come with pushing the boundaries of what's possible. Stay tuned as we unravel the dramatic turn of events that left everyone asking, what's next for Elon Musk and Tesla? On what seemed like a typical day, a seismic shift occurred in the corporate and legal landscapes. A Delaware judge issued a ruling that would become a defining moment in corporate America. Elon Musk's $55 billion compensation package from Tesla, a figure that defies imagination and dwarfs the earnings of entire corporations, was abruptly invalidated. This decision didn't just make headlines, it sent shockwaves around the globe, challenging our understanding of executive compensation and corporate governance. The implications of this ruling extend far beyond the immediate financial hit to Musk. They signify a moment of reckoning for the way we perceive value, reward, and fairness in the upper echelons of the business world. The genesis of this legal battle can be traced back to a single Tesla shareholder who dared to question the colossal sum earmarked for Musk. This shareholder's challenge wasn't a mere whisper of dissent. It was a loud, resonant voice that questioned the very foundations of corporate decision-making at Tesla. The crux of their argument was simple yet profound. The justification for such an unprecedented pay package was murky at best, and the process by which it was approved seemed to lack the rigor and transparency expected in such high-stakes decisions. This bold move to challenge the status quo ignited a legal and public debate that would scrutinize not just the figures involved, but the principles underlying corporate compensation and governance. In the wake of the judge's landmark ruling, Tesla's board found itself in uncharted waters, tasked with the daunting challenge of reimagining Musk's compensation. This wasn't just a minor adjustment, it was a fundamental overhaul, a chance to redefine the relationship between Tesla and its visionary leader. The board was faced with critical questions. How do you quantify the value of innovation and leadership? How do you align the interests of a trailblazing CEO with those of shareholders and the broader corporate mission? This period of introspection and recalibration represented a pivotal moment for Tesla, offering an opportunity to set new precedents in executive compensation and to reaffirm its commitment to transparent and equitable corporate practices. The ramifications of this legal verdict extended far beyond the boardroom, striking at the heart of Musk's personal fortune. The annulment of the $55 billion package was not just a line-item adjustment. It was a monumental shift that had immediate and profound implications for Musk's standing among the world's wealthiest individuals. Yet, this setback, steep as it was, also highlighted Musk's resilience and the volatile nature of wealth at such stratospheric levels. It underscored the ephemeral nature of financial valuations, especially when linked to the fortunes of dynamic, fast-evolving companies like Tesla. For Musk, known for his ability to navigate tumultuous waters, this was yet another test of his resolve and ingenuity. The ripple effects of the legal decision in the courtroom spread far and wide, deeply impacting the world of finance and leaving a noticeable mark on how Tesla's stocks were performing. Right after the judge's verdict, there was a clear drop in the price of Tesla's shares, serving as a solid proof of how nervous and uneasy the market felt about all the uncertainty and the heated discussions surrounding Tesla, a company that many people keep a close eye on. This drop in share price wasn't something minor or easily overlooked. It was a major occurrence that added to the list of difficulties Tesla was already dealing with in a year that was full of ups and downs. For those who invest in stocks and those who closely follow the ups and downs of the market, the judge's decision served as a strong reminder of just how many different things can affect the value of a company's stocks. These include the way a company is run, how much its top executives are paid, and even larger forces like the overall health of the economy and the rules set by governments. When faced with the turmoil brought on by legal and financial challenges, Elon Musk reacted in a way that was very much in line with his well-known personality. He was straightforward, showed no signs of regret, and his response was filled with the kind of clever humor he's famous for. He went on to use social media to share his thoughts, specifically pointing out the drawbacks of setting up a business in Delaware. Despite Delaware being recognized for its favorable laws and court system for businesses, Musk's comment was more than than just a casual remark. It offered a glimpse into how he thinks and his willingness to tackle obstacles directly. His response, though seemingly playful at first glance, actually revealed a lot about him. It showcased the distinctive mix of humor and boldness that Musk is known for, qualities that have made him both admired and critiqued by many. These attributes are now key parts of what people expect when they think of Elon Musk. To grasp the sheer enormity of Musk's pay package, it's instructive to compare it with the earnings of other top executives. The $55 billion figure wasn't just large, it was stratospheric, eclipsing the combined compensation of 200 of the highest-paid executives in 2021. This staggering disparity brought into sharp focus the debate over executive pay, particularly the question of how to balance rewarding innovation and leadership with ensuring fairness and equity. The court's intervention in this case underscored the growing scrutiny of executive compensation practices, especially those that break dramatically from established norms and raise questions about corporate governance and accountability. Judge Kathleen McCormick's decision in this case was a critical examination of the processes and principles that underpinned Musk's compensation package. Her ruling highlighted concerns about the fairness and transparency of Tesla's board's decision-making, suggesting a need for a more rigorous and equitable approach to executive compensation. This judicial scrutiny extended beyond the specifics of Musk's pay, touching on broader themes of corporate governance, the role of boards in safeguarding shareholder interests, and the importance of accountability in setting executive pay. The verdict served as a potent reminder of the legal and ethical frameworks that govern corporate behavior, emphasizing the need for companies to navigate these complexities with care and integrity. The fallout from this ruling had implications that rippled through Tesla, affecting not just its stock price, but its corporate ethos and its relationship with stakeholders. The annulment of Musk's compensation package was a watershed moment that prompted a re-evaluation of Tesla's governance structures and its approach to executive remuneration. This episode was a litmus test for Tesla's resilience and adaptability, challenging the company to reaffirm its commitment to innovation and sustainable growth while adhering to principles of fairness and transparency. For Tesla, navigating this controversy was about more than just adjusting financial figures. It was about reinforcing the values and visions that have propelled it to the forefront of the electric vehicle revolution. Elon Musk has played a huge part in making Tesla the successful company it is today, thanks to his forward-thinking ideas and the big impact he has on the company's decisions. However, when a judge pointed out how much control Musk has over Tesla's board, it made people think hard about how power works inside big companies, especially those run by very strong and persuasive leaders. This part of the judge's decision opened up a wider conversation about how to find the right balance between having strong leaders and making sure a company is run properly. It underlined how important it is to have solid rules and systems in place. These systems are needed to make sure that even the leaders with the most influence follow guidelines that look after the interests of the people who own shares in the company and make sure the company is accountable for its actions. The implications of this legal decision for Elon Musk and Tesla are manifold, opening up a spectrum of possibilities for the future. The ruling not only calls into question Musk's future compensation and stake in Tesla, but also invites speculation about how this might influence Tesla's strategic direction and its ambitious projects. As the dust settles, the key question remains: how will Musk and Tesla navigate this new landscape? The answers will shape not just their own trajectories, but also the broader narratives of innovation, leadership, and corporate governance in the tech industry and beyond. And there you have it, folks, a twist in the tale of innovation and ambition that's as gripping as any thriller. What will Elon Musk's next move be? How will Tesla steer through this storm? The answers are unfolding, and the stakes are as high as ever. If you're hooked and craving more tales of tech titans and their game-changing ventures, you're in the right place. Smash that like button, share this video far and wide, and don't forget to hit subscribe. The journey is just getting started, and trust us, you won't want to miss a single turn. Stay tuned because the future is full of surprises.